Hello, everybody. Welcome to the closing beat. Happy Monday out there. How you doing? Yeah. Hope you had a good weekend. We are financial advisors here at Jazz Wealth, and this is not my house, by the way. One of my first calls today was a client that's been with us for 2 years, and he said, I'm going to be in town. Would it be okay if we met somewhere? And I'm like, come on by. And he's like, I don't want to, I don't want to go to your house. I'm like, what? And I'm like, we have an office. He goes, you have an actual office? And I'm like, yes, there's like 10 offices here. There's a TV studio and everything. And for 2 years, he thought I was working out of my house. I mean, some days I would, I wish that was the case, I guess. But yes, we are official company here. Maybe I neglected to share that with you. But as pretty as that looks back there, that is not, that's not a wall. That's way back there. That is a part of our entire studio, which I think you could see at the beginning of the show here. So, yes, we are real. And one of the differences actually between us and other advisors is we don't take your money. So you don't have to give us money. So I don't trust that guy on YouTube. Don't. I wouldn't do it either. You just give us access to invest your account. You control everything else. We can't see your personal information or anything else. We just simply grow the account. So hopefully you'll check us out. And I was thinking about doing like an open house or something one of these days soon, where we can just kind of go over what do you get? What's it like? I haven't done that in a long time. But today our focus is to talk about the stock market, because we are one of the only advisors that actually manages our own funds. They don't cost anything. We don't charge for them. And it helps you get to see how the hot dog is made, so to speak. And so I like talking about the markets. Most advisors can't do that. Let's start doing that then. If we look at the S&P here today, it really, honestly, it really tried hard to give up the day's gains. It wasn't a bad start to the day. If you notice, we had a slight gap up to start the day, and it pretty much just faded away throughout the day. Last week, we lost 2.7%. We're now down 3 weeks in a row. If you look at our research site, if you're a client, you can use it. And if you're a research member, great, jazzwealth.com/research if you want to join. But on our research site there, if you look at something like that, well, how often when the stock market falls 3 weeks in a row, what happens on the fourth week, or what happens over the next 3 weeks? Well, actually, averages about a 1% gain over the next 3 weeks, and a 60% of the time it's positive. So, odds slightly in your favor, but if we saw more downside here, it wouldn't be, the end of the world. Also, I want to point out that technical traders see that the downtrend is broken. This was previous resistance, and the way technical traders will say it is previous resistance becomes current support. And that's pretty much why we're just sloshing around right here at these numbers, right? And I've left a downtrend line so you can see it there. That is now our short-term technical support. So if you believe in that stuff, or like the 200-day moving average, that is probably why you're making decisions right in here. I'd also point out that this is the sweet spot for options sellers. You probably already know this if you are, but this is your sweet spot because 90% of the S&P has already reported. However, the average stock's implied volatility is above average. That's what you love if you're an options seller. So this is your sweet spot. Get to work. I would also maybe point out consumer discretionary. We got like 10% left of that sector. That's the most number of stocks in a particular sector that still have to report. So out of all the sectors, that may be one that you skip. I can't tell you what to do, but I'm just saying you got your sweet spot there. I hope you enjoy it. And that's kind of the lesson, by the way, is, you don't often need to, and I'm going to go over this a couple times today. It's not necessarily, I think the stock will go up or down. Do you think that these guys at Goldman Sachs and JP Morgan make decisions based on somebody's opinion about how they feel about the stock? Well, kind of, yes and no, but a lot of it has to do with opportunity. So as I mentioned a second ago, an option seller, your odds of success are currently a little bit high. It won't stay that way, but this is that moment in time where you would, strike and put on your positions and stuff, and then maybe that deteriorates. So there's different reasons, of course, that you can use for trading, investing, and all that stuff. We'll cover a little bit more here in just a second. The Dow also down 3 weeks in a row, but not such a big deal. It's at the bottom of the range here. This is its technical support area there. It's lost about 3% in the process to bring you back down to these prior lows. I would point out there's a handful of stocks that have done this to the Dow. Intel, Chevron, you can see the pullback there. Amgen is another one, obviously pretty severe pullback in the healthcare space there. And Caterpillar, these four stocks have been the biggest losers during that time. If you like that sort of thing, you know, some people start at the top and they look at the Dow and they say, okay, I see it's pulling back. I'm optimistic or I'm bullish on the Dow. Therefore, I want to find stocks that have also pulled back. If that's your thing, then that's where you're looking. If you don't like that and you like to play momentum, your top players in the Dow, it's going to be financials. And that's all because of earnings, by the way. They got their boost from their earnings report. Goldman Sachs is at the top of the list. American Express, you can see still holding up from its earnings report. And JP Morgan about to break out of its little sloppy range. But again, most of this came or started at the beginning of their earnings cycle there. So a little momentum picking up. We'll cover that more in just a second. The NASDAQ down 3.3% last week. That is the worst pullback of the year so far for the NASDAQ. So if you're looking for that kind of weakness, you're going to look towards the NASDAQ. About 10% of the NASDAQ is down 10% over the last month. Kind of an interesting stat there. And so now what do you do? If you're building a portfolio, if you have a lot of long-term investments, if you're a short-term trader, what is your thing to do? Well, we talked about pullback stocks that are already outperforming the market. Strategy number one. Strategy number two, option sellers. If you're a covered call person, you like to sell naked puts, whatever it is, if you're straddle strangles and all that, well, you're looking to get to work. You're probably in the biggest, sort of have the biggest sense of urgency to get something done here. The rest of us are saying, okay, we'll look for the pullback and see what we can do. Where do you look? Well, here we go. We're going to try to do this every week or so. Yeah, I'm sorry. It's a little big, but I'll go over it here. Here is your relative performance by sector, and I figure I'll squeeze this in every week if you like. Energy, relatively flat compared to the S&P. So if you just look back over the last few months there, not a whole lot going on there. Relative strength in consumer discretionary, though starting to pull back just a little bit there. You're finding a little bit of short-term strength in consumer staples down here. We talked about this last week, the recession concern coming back into the market, consumer staples, healthcare, and a little bit of utilities. If the line is going up, then that sector is currently outperforming the market. If the line is going down, that sector is underperforming or in the process of underperforming. So for example, real estate in the short term is underperforming while it had been outperforming. So what do you have? You have a pullback inside of outperformance. Some people like that. You might make the same argument for tech in here. Obviously, very strong start to the year, best performing sector. Yay, it's very exciting. But in the short term, we have some concerns, right? It's starting to pull back just a little bit. To zoom in a little bit further, and maybe this will show up a little nicer for you. If not, I can make adjustments. Maybe do something like that. Ugh, that's my bad. That's the best we're going to get today. That's not bad. If you're looking at growth stocks, you got to recognize that slight pause. I made it really simple here. If the line is going up, then growth stocks are outperforming value stocks. And if the line is going down, your value stocks are outperforming growth stocks. Well, for the beginning part of the year, growth. Everybody wanted that aggressive growth. And now we're not so sure. So we've got a slight pause there in the difference between growth and value. If you look at large cap versus small cap, that'll be on your right-hand side here. The small cap factor of the market. I use Russell 2000, but that's pretty much the only thing you would use anyways. Small cap actually outperforming here in the short term. And I mentioned last week, that's a lot of those little baby AI stocks that are still growing up and, you know, trying to find their way. Everybody's chasing that kind of latest tulip mania or whatever it's called there. And so other than that, you have small cap continuing to outperform large cap. Just it's getting a little bit sloppy. So maybe a change of kind of trend in here. I do want to point out also a little bit further down the line, the best performers are following the secret formula. And you guys know the secret formula now, right? The secret formula is when the economy is getting weaker, return cash to shareholders in the form of buybacks, which I saw old Grandpa Buffett out there really gave a hard time to Biden and the Biden administration about share buybacks. And that gave the green light to everybody on financial media today to go ahead and join the same argument. You know where I stand. We've talked about this in the past every time they've had one of those surcharges for buybacks. But none the least, where are the best performers? Stocks that have the best total cash return, buybacks, dividends. They're not investing in themselves. They're not buying other companies. They're returning cash to shareholders, have been the best performers, along with stocks that are focused on and continuing to do buybacks. This is my way of telling you where the action is at without getting in trouble. And dividend growth, companies that are raising their dividend, they're spending money on giving you back your money in the form of dividends. Hasn't been the best. It comes in third place here. But of course, as far as the last couple months have gone, that's been a great place to get involved. And if you expect that to continue, you would want to look at stocks like this. So again, total cash returns, where all the money's at the moment. Stock buybacks, although it's a little volatile because of the political pressure, also the best performer, and dividend growth coming in third place there. What is the formula, you ask? Well, remember, we reviewed this here on the closing beat. It is, and what we're plotting here is the total returns of stocks over since 1991. So, for example, if you only invested in stocks that were focused on dividends and buybacks, again, with recessions here dotted and pointed out for you there, you would have the greatest performance of all. If you looked at only stocks that were focused on investing in themselves, R&D, maybe, adding new factories, things like that. You get what I'm saying. You would be more beneficial to participate in those outside of recessions, right? And if you were focused on stocks that said, we're just going to shore up our balance sheet, we're just going to hoard our cash, and maybe we'll buy some other companies because they get discounted there. Well, that's fine in normal markets, but during recessions, you're losing, right? So we kind of blocked off the recessions here so you could see that difference in performance. And now you know. All right, back to the markets here so we can get back on track, but that's your lesson of the day. I want to take a look at, you can look at some of the other stuff here, like crude oil. A little bit of an off day today. Remember, crude oil is commodities in general, by the way, are a trending market. So I've said this numerous times, you don't want to fight the trend on commodities. It's very difficult. I'm not saying you can't do it. But for example, if we take the entire Bloomberg commodity index and we said every time it makes a new 52-week low, let's track the performance going forward. Likewise, if it makes a new 52-week high, let's track it going forward and see if the trend is in fact your friend here. So in blue, we have every time it made a new 52-week low. 1 day later, after making a 52-week low, performance negative. 1 week negative. 1 month negative. 3 months negative. 6 months, you could argue real returns being negative. And it takes a year for you to see any positive returns there. In other words, fighting the trend of making new lows by you buying the commodities would have been a rough go, right? Alternatively, if the Bloomberg commodity index, in other words, commodities as a whole, make a new 52-week high, positive the next day, positive the next week, positive the next month, positive 3 months, positive 6 months, positive 1 year. If you are fighting that trend, that gets harder and harder as time passes, as you can see. So a really simple but kind of fun way to just show you how the flow works on commodities, right? And that's why I always say on oil, it's like, it looks like it's bottoming, but I don't want to be the one to guess that it's bottoming. And you could also make the same argument here that any attempt at guessing a bottom so far has not proven to be profitable. So a little bit difficult. Do want to bring your attention over to the dollar. We use the UUP here to track that. A little bit of a bounce off the lows in the dollar. What did we talk about when the dollar was cresting or getting extended? We said, well, hey, companies that have a lot of international sales aren't going to see that, what they call it, that Forex headwind that they were talking about. Instead, they'll switch the word and it's going to say tailwind. Well, now we've got the opposite thing going on here. The Forex conversion for companies that have lots of international sales and less U.S. sales is getting harder and harder. We can actually prove that by looking at the performance of just grouping them all together. Stocks that have the majority of their sales here in the U.S. are underperforming as they should have been. We've talked about that, but now trying to find a bottom. Stocks that have a lot of their sales come from overseas have obviously had an amazing run, big run there. But now with the dollar increasing, look, it's starting to pull back. Those two are very tightly correlated. Dollar goes up, international sales companies go down. Dollar goes up, U.S. sales companies go up, right? So I love that we got to do that, as little as we are here in the world of financial media. I love that we can actually, instead of saying, oh, you should have bought stocks that have high international sales. Sorry about that. I did. You missed it. Right? I hate that. Instead, we get to show ahead of time what would happen, how it would happen. Then it happens, and we can say, okay, what's going to happen now, right? Very, very cool. Speaking of cool, we have some cool classes that we do each week. Last week we did, we focused on a number of different things. We talked about the state of the market last week in our wine and wealth classes that are every Thursday for clients. We've done covered calls, return on capital. We've done new client orientations, some tricks that are tax tricks wrapped around joint brokerage accounts and individual brokerage accounts that you may want to take a look at there. And this week, Eric will be taking over to go over a new client orientation as we do the first week of every month. How to get the most out of jazz. Where should you be looking? There's a lot coming at you when you join us here. We don't just say, let us invest for you, and then we go play golf. There's a lot coming at you, and so we want to make sure you're obviously not overwhelmed, up to speed, and ready to get things rolling. Get your dough straight, as we like to say around here. Nobody's got a problem with that. All right, stocks in the news. First up, you got Amazon. Wall Street Journal says they're going to expand their same-day delivery. I don't think anybody has a problem with that. My wife clicks that stinking button all the time, and it's shocking how quick things get there. Like, really cool. Usually in the evening, they just show up, drop a box on the door, and, you get used to ordering from them. So good for them. Union Pacific. Actually, there's a lot of news going around in the world of railroads, obviously sad news, but a lot going on there today. Union Pacific CEO is going to be on his way out, and they've got their succession plan announced. They talked about that going forward. A little revitalization there. Obviously, that's a good thing for the stocks, up 10%, and usually that's the case. I think the one example that I remember, and that was sudden, right, because Steve Jobs passed away, that might have been the one example where a stock moved lower. Maybe when Bob Iger left the first time from Disney. I'm not totally sure about that. Okay, let's look at the B-class shares because they're a little cheaper. Berkshire Hathaway, lots of stuff going on there. Reported their earnings over the weekend. Shareholder letter went out there, and of course, that's where Warren Buffett had some comments to the some very eloquent comments to the current president about, hey, quit picking on us for these share buybacks. You're obviously a financial idiot, which is, that's Buffett words. We can all say them now because Buffett said it. And so that's pretty much what's going on there. I would be on the same page as that. Little underguided there. Enphase, a little bit higher here today. So Enphase, we did a class actually for research members and for clients where we talked about the beneficiaries of the Inflation Reduction Act. And it's one of the things you can rely on when people say, where should I invest? How should I invest my money? Well, we're uncertain about the economy. We're uncertain about the stock market, most people. And so where do you go? You go for the companies that are guaranteed to get these government dollars by following the rules that the government set out. And so Barron's actually came out with an article, and that moved the stock here today, where they pretty much took our data. I'm just saying, I don't know where they're getting this stuff from, but they basically said Enphase is going to be one of those that strongly benefits from the Inflation Reduction Act. And if you're a research member, well, you already know that. You know what I mean? You already know that. Pioneer Natural Resources working on a merger, and so obviously that doesn't help the stock. This news is not new news, but there's a great follow-up. Hey, we're thinking about doing some acquisitions. We've got some cash. What happens to the stock? Nobody wants you to do that right now. Because of what? The secret formula, right? When times are maybe leaning towards bad, put your money back towards shareholders. Buy back your stock. Pay a higher dividend. They pay a pretty handsome dividend, but pay back more in the form of dividends. If you're going to look at doing M&A, well, we now know, how are you going to perform? You don't have to guess. Which one of these performance lines includes M&A? Like, we should share this chart with Pioneer and go, oh, wait, don't do that. If we head into a recession, you are going to underperform. It's already starting to underperform, so yikes. All right, what else do we have here today? That's pretty much all I got. Jazz After Dark here tonight, going over 4 more retirement planning tips to smooth out that retirement planning. Doing a little more focus on the retirement planning here a little bit lately, because I think we've reached that point where people go, oh, this doesn't have to be boring, and I can kind of knock out a piece at a time. I don't have to conquer the world in one financial plan. I love that. That's what we're here for. Anyways, cool. Let's see what questions you have, and then I'll wrap it up. Get on out of my way. You almost forgot to hit the like button. I appreciate everybody hitting the like button. That's good there. And you like the stats. I like the stats too, man. We're on the same page. Always learning something new. You guys are just feeling awfully nice here to start the week, huh? That's nice of you. Kelly, if you take an early withdrawal on IRA, do you have to pay Social Security, Medicare tax, or just income tax on the 10% penalty? I'm assuming you're saying, uh-oh, I'm under the age of 59. I have to take money out, and it's not for one of the qualified reasons. Remember, there's a number of qualified reasons you can take money out, and you will not have to pay a penalty, although you will pay the tax if it's a traditional IRA. You are paying that tax as an income tax that gets added to your income for the year, and the 10% penalty. Most of the time, brokerage firms will say, would you like us to estimate that tax and hold it back for you, or would you like to just deal with it on your tax return? 9 times out of 10, people say, I'll just deal with it on my tax return. More than 9 times out of 10. Hey, Tim Rogers back in the house, man. I like it. I pulled up YouTube to start this thing here today. I see Tim chewing on a French fry, man. That's a heck of a thumbnail you got there. Tom says, hey, Dustin, what do you think of starting positions in Fortinet and CrowdStrike? We're the number 2 player, lots of buybacks. Hey, that answers the question. Doesn't matter what my opinion is. They're buying back shares. How do you think they're going to perform? Without even looking, is the stock up or down, right? And we got Fortinet higher. What was that one? CrowdStrike. I don't know about CrowdStrike. Can't type today, man. Got my fingers still. That's all right. Just trying to put in a little bottom there. So same concept as the market, only that much better, right? From a technical perspective, it broke the downtrend and has yet to think about testing it. Is that stronger or weaker than the stock market? It's stronger, right? The stock market broke out of the downtrend and decided, let's go back and touch it and see if the technical traders want to buy there. CrowdStrike says, let's break the downtrend and just plug along. We'll force people to buy more and more and more. So a little bit of FOMO kicking in there. Possibly. Yeah, let's start over for Tim, man. Timmy just got here. He don't know the show always starts at 5 o'clock. He's got better things to do. Yeah. You still waiting on your 3M. I'm cheering for you. Almost 106.76, the low the other day. It did the same thing today, though. This is no different than the stock market. This will go as the market goes. It started stronger today, had every chance to stay strong, but just like the market, it just almost like voluntarily and slowly gave up its gains for the day. If that persists, that's what you need. If the market starts bouncing from here, now we know that this is behaving in line with the market, though weaker in the long term, but now you know. If you could be any animal. Cody, if you could be any animal, which animal would you be? Any animal. Lion? Oh, he says that with some anger in his voice, too. I'd probably be a snake because people leave you alone, you know. I probably shouldn't say that as a financial advisor currently here looking for business. I don't know. If you could be a tree, what kind of tree would you be? That's an interview question. Like that Mercury Insurance used to ask that as an interview question. I knew the lady at HR. We go way back. She said, if you could be a tree, what kind of tree would you be? Yeah. Well, because she told me I'd never pass an actual corporate interview. And I was like, hit me. What you got? Tell me a question, girl. And she goes, okay, if you could be a tree, what kind of tree would you be? And I'm like, a Christmas tree, because everybody's freaking happy when they see a Christmas tree. And she's like, oh, okay, that's not bad, but that's not what we're looking for. No. Watching West Rock as well. Cool. Is a hot dog a sandwich? Now, this depends on what part of the country you're in. Got to be careful with that answer. Is it? Cody's saying, yes, it is a sandwich. Why? You put meat inside of a bun, it's a sandwich? So peanut butter and jelly counts? It's a sandwich. Hey, you heard it, man. There you go. Chris got a good answer. Bamboo. Yeah, but that's the answer they want to hear. Or like a oak tree, deep roots, long lasting, stable, secure. I'm like, Christmas tree? Who doesn't smile when they see a Christmas tree? I love it. Okay, so no real questions today, I see, but very clever for you guys. That's how I know that my audience that we have here, we're the same. You know what I mean? I love that. So if I'm myself in front of you guys, then I attract those types of people that can have some fun with the day. I like that. I like that. That's why I don't ever wear nice suit and ties and stuff, because I don't want to attract that person. I'm going to disappoint them. I just know it. We don't want that to happen. All right, I'll wrap it up there. You guys enjoy the rest of your day or evening, wherever you're at. We'll be back tomorrow, of course, to do it all over again. I'll see you tonight. Jazz After Dark. Come hang out with me. I'll try some things that maybe you hadn't thought of before. And that includes tonight's drink, by the way. What's it going to be? Adios.